What if you had an AI that could look at the market right now and instantly find its twin from sometime in the past? Well, that's the big claim behind a new trading tool we're digging into today. The idea is that it can predict the very next market move by finding these old patterns. So, can an algorithm really predict the future? Let's dive in and find out. So, it all comes down to this one phrase from the source material: finding historical neighbors. It sounds cool, right? But what does that actually mean when you're a trader staring at a screen trying to make a decision? We're going to unpack whether this is just a clever marketing buzzword or if there's something really solid working under the hood.
All right, so the specific tool we're looking at is called the Machine Learning Triple K. And its promise? Well, it's a big one. It claims it can give traders a predictive edge using AI to help them time the market. That's a powerful claim for sure, so let's see what's really behind it.
And here it is. This is the heart of the whole thing. We're not just talking about guessing if the market's going to go up or down. No. This is about trying to nail those super important turning points, the reversals, maybe even just moments before everyone else catches on. And for any short-term trader, you know that's basically the holy grail. Okay, so let's pop the hood and see how this thing actually ticks. The engine driving this whole operation is based on something called a nearest neighbor algorithm. This is the secret sauce, you know? This is the part we've got to understand to figure out if these claims really hold any water. Which leads us to the big question, right? Nearest neighbor. Sounds a little technical, maybe a little intimidating. But trust me, the core idea is surprisingly simple. It's a classic machine learning trick, and it's all about one thing: recognizing patterns. Okay, think of it like this. Imagine you're trying to guess if your favorite coffee shop is going to be packed. You'd think, well, it's 9 a.m. on a Tuesday, it's sunny out. Then you try to remember other sunny Tuesdays around 9 a.m. Those past days, those are your neighbors. This algorithm does that exact same thing, but with tons of market data, all based on the idea that market psychology, when you break it down into data, tends to run in cycles. So here's the four-step dance it does. First, it takes a snapshot, like a fingerprint of what the market is doing right now. Then, it goes digging through a huge library of past market action, looking for moments that look almost identical. Those are the neighbors. And then, here's the magic part, it looks at what happened next in all those old scenarios to make a really educated guess about what's about to happen next.
So, we've got the how, but what about the why? What's this all for? Well, this AI engine was built for a very specific job, which brings us to putting it to work with a strategy called predictive scalping.
And just so we're all on the same page here, let's do a quick level set on what scalping is. Think speed, pure speed. Scalpers are not holding on to things for days or even hours. They are in and out of the market super fast, trying to grab tiny little profits from a whole bunch of trades all day long. So you can see why this tool is built for that world. It's designed for day traders and scalpers who live and breathe that high-speed environment and have to make split-second decisions. They're hunting for those little reversals, and their entire strategy is banking on that old idea that history tends to rhyme. Now listen up, because this part is absolutely crucial. The source material is very clear that this AI tool is not a magic button. You don't just press it and walk away. It's designed to be one half of a whole strategy, combined with a classic, time-tested analysis method. And this gets at a huge problem for any short-term trader. You might see what looks like a perfect little setup for a quick trade, but if you're fighting against the bigger, more powerful market trend, well, it's like trying to swim against a strong current. You're going to have a bad time. So, how do you know which way that current is flowing? And the answer, according to the source, is about as old school as it gets: a simple moving average. It's just a line on your chart that smooths out all the chaotic little price wiggles and gives you a clean look at the market's dominant long-term direction. So this basically lays out two paths you can take. The recommended path, the smarter path, is to only take the buy signals from the AI when the price is already above that big picture trend line. That way, you're syncing up your quick trade with the market's overall momentum. The other path, taking buy signals when you're below the trend, that's fighting the current, and it's a much riskier game. So the playbook here really boils down to 3 simple steps. First, use that moving average to get your bearings, to see which way the wind is blowing. Second, let the AI do its thing, scanning for those neighbor patterns to find a potential entry. And third, and this is the most important part, you only pull the trigger if that AI signal is going with the flow, not against it. When you boil it all down, what you're really looking at is a hybrid strategy. It's about combining the predictive, pattern matching of new school AI with the foundational wisdom of old school trend analysis. You're essentially getting modern tech guided by classic, time-tested principles.
And that leaves us with one last, really big question to chew on. This kind of AI is fantastic at finding patterns that have already happened. But what about something totally new? A pattern the market has never, ever seen before? If a tool is trained only on what's in the rearview mirror, how can it possibly prepare you for a future that looks nothing like the past? That's the fundamental question to think about here.